Hey everybody, welcome back to Stock Investor. Nick here, talking to you today about Fortinet, our first cybersecurity earnings release for the Q4 2024 earnings season. And boy, it was a doozy. Let's go over the key points that we'll discuss in this video. Fortinet is the leader in network security. So we're going to be talking about the current state of affairs in network security and how things have changed for Fortinet in recent quarters. They are back in all-out growth mode. We'll discuss why that is and why it's important right now. And then we'll finish out with some updates on Fortinet stock's valuation. Quick plug here for our membership, Semiconductor Insider. The beginning of January, we did a roundup of what we call the big four cybersecurity pure plays: Palo Alto Networks, Fortinet, CrowdStrike, and Zscaler. We ran it through a couple of valuation metrics and ranked the top ones for 2025. Fortinet came out on top, including when using the rule of 40 before the Q4 numbers, which were quite good. Fortinet far exceeded this rule of 40 at 48. Yes, even better than the software pure plays, CrowdStrike and Zscaler. Check out Semiconductor Insider for all of our research and discussions on our portfolio and investment process. Okay, let's talk about network security. So cybersecurity industry, obviously there's a lot of different parts and pieces to this, a lot of overlap with other software industries like analytics, but we're probably going to have closed out 2024 with just over $200 billion in annual global spending on cybersecurity products and services, expected to be an annual CAGR of about 12% over the next 5 to 7 years. Now, network security, the big bubble in the top left there, has been around a long time, and it's probably not going to grow at that industry average over the next 5 to 7 years. But that could be just okay for a company like Fortinet. The company does have a lot of competitors in network security or physical location security, firewalls. A lot of other companies provide these firewalls, which is a device that basically creates a perimeter around a physical location. It could be an office building, it could be a retail store, or it could be even a data center. So a firewall, this is traditional networking and traditional security, creates that barrier. Think of this kind of like a castle and moat. But because of the advent of the cloud, especially in the 2010s, and that continuing now today with a lot more workloads headed for the cloud to take advantage of things like artificial intelligence, the need for cybersecurity services is rapidly changing. What is needed these days is much more akin to something like a spy agency, counterintelligence agency, like Ethan Hunt in Mission Impossible. Yep, Tom Cruise getting some free promotional activity for us here for his new Mission Impossible movie coming up in May. Speaking of actual sponsors, though, the sponsor of today's video is Aura. In the spirit of talking about enterprise cybersecurity, you and I need to be concerned with personal safety online as well. That's where a company like Aura comes into play. It is a suite of personal protection tools to make sure that your identity stays on lockdown. Aura does monitoring for you, can remove your phone number from the web, and help with keeping you on that do not call list. And perhaps there's another reason for concern. By now, you've no doubt heard of Elon Musk's Doge representatives given access to the US Treasury. That means they have access to things like your social security number, bank accounts, home address, and so on. Whether you think that's a good idea or not, be aware that our personal data could be at risk because of this transition happening in the US federal government. A lot of federal agencies put on notice, and who knows what could happen to our identities online. Check out Aura and the Aura app, link in the description below, aura.com/chipstockinvestor. Use that link to get a 14-day free trial so that you can check it out for yourself and take it for a test drive. That is aura.com/chipstockinvestor. Let's get back to talking about Fortinet and enterprise security. So let's talk a little bit more about this transition from traditional networking, like a castle and moat, to secure networking. What Fortinet has been calling for years the convergence of networking and security. So basically, embedding various security hardware and software based services throughout a company's entire IT stack. Fortinet pointed out in November that we're reaching that tipping point where newer secure networking architecture is beginning to overtake traditional networking. If not this year, perhaps in 2026, the expectation that secure networking reaches $50 billion a year in spending and outpaces traditional networking architecture. And of course, Fortinet's business rooted traditionally in those firewalls, those hardware-based devices, but they do a lot more than just that today. They have the unified SASE service, which we'll talk a little bit more about here in just a second, as well as SecOps, security operations. So a lot of different software tools that an IT and security team would need to make sure that their data isn't leaking into the wrong hands. But what makes Fortinet unique is it all starts with the hardware. And as you may know, for a long time, they have been developing their own custom chips, ASICs, application specific integrated circuits that power that hardware. And for a long time, Fortinet has been the leader in that hardware thanks to those application specific integrated circuits. And because they have actually started with the hardware itself, they have been able to steadily increase the number of software services that run on their custom hardware. And because of the best in class networking hardware that Fortinet has been working on for so many years, they've been able to steadily add the number of applications and security services that their customers can tap into based on what their needs are. And so, as these needs get more complex as the years go by, Fortinet adds more software on top of that platform. And unlike all of its peers, Palo Alto Networks, Checkpoint, Cisco, you name it, Zscaler, Fortinet's operating system is consistent across all of the software products it provides. And that includes in this newer product, single vendor SASE or secure access service edge that you see the last line there. What is SASE? We'll link the last video where we discuss this in the description below. In a nutshell, this is kind of what the convergence of networking and security actually is. So the cloud, computing services that companies can tap into via the internet, the computing takes place in a data center. Fortinet has been building out hardware infrastructure in those data centers all over the world. So the security is embedded directly into the network itself. So Fortinet has some of its own data centers they have on this map in red. We also talked about some of the points of presence that they've been building using Google Cloud's data centers around the world, some co-location data centers as well. And so these SASE services are a way for a company to get everything they need in one convenient package. They get the networking hardware they need, as well as all of the software security services they need in some sort of subscription service or multi-year, oftentimes some sort of negotiated multi-year contract with a company like Fortinet, as well as others like Palo Alto Networks and of course Zscaler. Not really a true single vendor SASE, but they're getting there. They're working towards this. But because Fortinet has those custom chips and all of their own hardware that those chips operate, you can see why a company would find this product compelling. But let's talk about some of the financial realities for Fortinet, because for the last couple of years, they've actually been in a downturn. And that's because whenever we're talking about hardware-based sales, you get some cyclicality that crops up every once in a while. So we've showed you this chart many times. Fortinet falls under the cloud and enterprise computing segment for end market sales of semiconductors and electronic equipment. But especially starting in 2024, we started to see the beginning of a new growth cycle. And so Fortinet's product sales have begun to heat up again. You can see in this chart from our friends at finchat.io, the decelerating revenue growth, that's the orange line, in 2023 and 2024. It was the actual software and services portion of the business, that revenue in blue, that continued to grow throughout the downturn and throughout the bear market. But you can see the hardware, the product-based revenue, the red part of the vertical bars, started to slow down in 2022 and then actually declined from 2023 to 2024. Now, the good news with this that we called out throughout the last 2 years is Fortinet actually remained highly profitable throughout the bear market. That's a very powerful place to be when a lot of its peers were dealing with falling profit margins, some of them even facing periods where they were losing money. But you can see this reflected in Fortinet's strong balance sheet. They were able to accumulate a bit more cash on balance in 2023. And then as we came out of the bear market in 2024, you see they added something like $1.6 billion in cash without ever having to take out debt to bridge the gap from the bear market trough to the new growth cycle. And so now here we are, Q4 2024, total revenue up over 17% year over year to almost $1.7 billion. And as we called out last quarter, it's not just the software services driving the business higher anymore. Product revenue was starting to heat up. You can see there from Q2 to Q3, a slight sequential increase, but now you see the big sequential increase from Q3 to Q4 highlighted there, $574 million in product revenue in Q4, up $100 million quarter over quarter, and almost an 18% year over year increase. This is great news for Fortinet's business model. Historically, what happens is they sell the hardware, it gets installed into their customer's network, and then after it gets installed, in the years that follow, those customers turn on the software and service segment of the deal, which is something kind of like a recurring subscription model almost. Fortinet lands the product sale and then get that nice steady services growth in the years to follow. So great news for Fortinet's momentum as we head into 2025. I'll first show you what happened to adjusted or non-GAAP net income as a result of this increase in product sales in Q4. $571 million in adjusted net income, 74 cents on a per share basis, almost a 50% year over year increase. And that was kind of the story these last few quarters. A big jump in adjusted net income in 2024. Again, momentum as we head into the new year. And you can see what this has done for Fortinet's free cash flow conversion, $380 million in free cash flow in Q4, in spite of almost $100 million worth of property and equipment purchases related probably mostly to the SASE service, the purchase and install of the hardware in data centers around the world to support their customers onboarding to that new service. So big jump in free cash flow, much higher than double what it was in Q4 of the year prior. Now, this type of profitable growth probably won't continue at this same rate. So let's look at the 2025 guidance that management provided. At the midpoint, revenue expected to be up about 13%. And then on an adjusted net income per share, only about a 3% increase year over year, excluding any share repurchases. Now, we did see that massive jump in adjusted earnings per share last year. So some of that adjusted growth coming down this year to kind of average things out. Now, adjusted net income and adjusted earnings could be indicative of where the free cash flow is headed for 2025. Perhaps there's going to be more big purchases of property and equipment, more CapEx to install in data centers to support that SASE service. We'll see how it all pans out. But ultimately, what this means, though, is Fortinet back in all-out growth mode. And while this does tend to be a cyclical business, profit growth can be a bit lumpy. You have a good year and then maybe not such a great year for growth, profitable growth in the year that follows. But the average over time has been exceptional for this business in the more than a decade now, a decade and a half that they've been a public business. You can see that reflected in the stock price performance there on the right. even with the long, prolonged downturn for a couple of years there in the middle in 2022 and 2023, CAGR for the stock of 35% over the last 5 years alone. So is it too late to purchase Fortinet stock? Draw your eyes over to the left-hand side of the slide. Next 12-month expected price to earnings of about 42x and price to free cash flow of about 38x. A PEG ratio just over 1. So this isn't exactly a cheap stock, but we can't really call it, at least based on the expectations at this point, we can't really call it egregiously overpriced at this point either. It's going to depend on how earnings growth and free cash flow growth pans out in 2025. So let's take it one step further and do a reverse discounted cash flow, reverse DCF, to see what would need to happen, especially in the next few years, to get Fortinet to fair value today. As I record this, we're looking at a stock price of $107. So we took a blend of trailing 12-month GAAP earnings per share and free cash flow per share of $2.33. That's the average of the GAAP earnings and free cash flow per share. And to get us to that fair value, we're assuming per share profit growth of about 30% for the next 2 years, and then a terminal growth rate thereafter of 6.5%. That gets us to right around what the stock is trading for today. The question for you as an investor now is to ask yourself, is this a reasonable expectation? This is certainly a high bar to clear for Fortinet, 30% per share profit growth for the next 2 years. However, if revenue is back in all-out growth mode, both in the products, the hardware that they're installing, as well as the services, including that next-gen SASE service delivered via data centers that Fortinet is constructing all over the world, perhaps this isn't so unreasonable. So if you've been watching this for a while, you know Fortinet is kind of goes back and forth. At this particular time, I think Fortinet is our largest cybersecurity holding. Palo Alto Networks just behind that. This is one that we've held for many years now and are happy to continue holding. If you're interested in learning more on our viewpoints on cybersecurity, how the technology is changing, consolidation happening in the industry right now, and who's winning as customers sort of consolidate around these leaders like Fortinet, Palo Alto Networks, and CrowdStrike, check out Semiconductor Insider. We have a whole section over there on cybersecurity and how we approach investing in this very important industry. The internet is not getting any safer out there, especially in this era of AI. So we'll see you over there on Semi Insider and see you again here soon on Chip Stock Investor. Take care, everybody.